Good afternoon, everybody. George Cavaligos for HFT Bonds. What a roller coaster today was, huh? Way to go, Fed. I just tweeted out, I don't know what they're looking at, but I didn't read the entire minutes, but I did not see one comment in there about what's going on overseas. And that worries me a little bit because of what's going on overseas. The Asian markets are very fragile. The markets in the Middle East are very fragile. We'll see. Again, I get this flashback to like 1987 where the bonds were breaking. Stocks rallied initially. I think bonds started breaking like in January. And we went all the way into October, basically, the middle of October. Bonds were near their lows. And all of a sudden, the stocks turned hard and crashed. And bonds were limit up 3 days in a row. I don't know if we're going to see a crash, but boy, the similarities are striking, and I'm worried. Let's put it that way. Nevertheless, back to bonds. Bonds were rallying all morning as shorts were covering in front of the Fed. I'm not sure what people were expecting. I think we were looking for the idea that the Fed was going to signal a little bit more clarity, maybe a little bit of an idea, like say we're going to taper September, maybe 10 billion or something. Well, they didn't give us any clarity. The bonds broke hard, closing near their lows. Bonds are just a couple ticks above their old lows. The 10 years are just a couple ticks above their old lows. I would not be surprised to see new lows. And again, we'll have to be very nimble here. I don't want to press the short side here. I'm so concerned that I actually bought some bond calls, October calls. Let's hope my timing is good. I'll roll them. They're cheap. You can find upstrike calls for very little in the bond market right now, since they're getting hammered every day. Like I said, I would not be surprised to see us take out the old lows, 130.05 and what was it, 124.11 plus in the 10-year, and then we'll see what happens below there. We had an opportunity to rally early today. We went up a little bit on the day, we're slightly positive, and then as soon as the minutes hit, the market got slammed again on big volume. 1.2 million 10 years, 364,000 bonds. Those are, bearish numbers. The open interest decline yesterday on the rally is also a bearish scenario. Well, we'll see. Tomorrow is going to be very interesting because stocks had the biggest whipsaw I've seen in a long time and ended up closing on their lows. Another failed rally there in the equities markets. And again, I'm very concerned about what's going to happen overnight in the Asian markets and Europe and the Middle East. It's a dangerous world we live in, so stay nimble here. If you're short, make sure you have a tight stop on the bonds and notes. Maybe buy some insurance like I suggested there, some cheap upside calls just to, as an insurance policy. God forbid you need your insurance, but it's good to have it, and it's good to have bought it before you need it. Okay? Bottom line. Tomorrow, tonight, keep your eyes open, stay nimble. Be careful of the old, new low and then back above the previous low kind of trade. I'm always leery of that when we're in these big sideways range trades. Basically the bonds have been 130 even to 132 even for a while here, and the notes have been between 124.11 plus and 126 and some slight change for quite a while too. And remember, the 10-year has not made new lows yet, as the bonds have over the last week or week and a half. So again, we got to be kind of careful. I'm not bullish. I'm cautious here, and I'm going to stay short term and stay nimble here. Have a great night. Be careful. Make sure you have good stop loss protection. Make sure you have some insurance. Have a great night.